In this video, I'm going to show you how to save capital gains taxes with a 1031 exchange. And real quick, a 1031 exchange is when you defer taxes, sometimes forever, and you sell one property and buy another one with very specific timetables and rules. How to save capital gains taxes with a 1031 exchange. Number one, figure your basis, which is the purchase price minus depreciation. Here's an example. Let's say that you bought your property for $400,000 a long time ago, but you then depreciated it over 10 years. That long time ago in this example is 10 years. And your depreciation is based on the value of your property building, not your land. So we're considering $320,000 as your building. And subtract your depreciation, you have the basis we talked about in number one. Next, number two, figure your gain. These are accounting terms, basis and gains, and so we have to figure them to really understand it. And your accountant will understand this, but for you to understand it first is very valuable so you know what questions to ask. How do you figure gain? Sales price minus your basis that we had number one. Number two above, we talked about your gain. Take your sales price minus your basis. In this example, we used a sales price of $1 million, and we calculated the basis above, and then we know what your gain is. Number three, talk with your tax advisor. Why do you want to talk with your tax advisor right now? You've just figured out what a basis and a gain is. The reality is there are other factors that probably refer to your situation, and your tax advisor knows what it is. Number four, subtract depreciation from gain. We talked about what your capital gain is. Your actual gain is $716,364 in our example. And why are we subtracting out our depreciation? Well, guess what? Depreciation's taxed as ordinary income rate called depreciation recapture. But your capital gains that you'll be using for your calculation of capital gains taxes will be $600,000. Number five, using your capital gains rate, calculate the capital gains projected tax. In this example, I'm going to use a single taxpayer, meaning that you might be an LLC, you might be divorced, you might be single, and I'm going to say that your income is $175,000 a year. So this year, 2022, the capital gains rate would be at 15% for that kind of base income. So we take your capital gains times your rate, which is 15%, and that's $90,000. So if you are going to sell your property, your taxes on capital gains, I've projected in this example at $90,000. I think that's a lot of money, don't you? So what are we going to do about this? And number six, do a 1031 exchange. Well, let's review what the taxes you pay when you sell a rental property versus exchange. Capital gains tax, 15 to 20% of your gain, plus more maybe, depending on what your gain is. Depreciation recapture tax, up to 25% of what your depreciation was, because the government wants to recapture what you took off your taxes before. Your net investment income tax, sometimes called a Medicare tax, is 3.8% of your net investment income. And last, state capital gains taxes. Some states have it, some states don't, but it's something that you might have to pay. Guess what? When you do a 1031 exchange, you defer your capital gains taxes, you defer your depreciation recapture taxes, you defer your 3.8% Medicare tax, sometimes known as the net investment income tax, and you defer your state tax. Oh, and if we haven't met, I'm Maxine Golden. I am a longtime real estate broker, and I started the 1031 exchange lady because I believe you deserve the same tax breaks as the big investors. But don't take my word for it. Ask the IRS, ask your accountant. They will tell you the same thing. So I specialize in helping rental property owners like yourself across the country find qualified, experienced real estate brokers to help them with their 1031 exchanges. So you can ask me a question in the comment below or check the description and book a call. I look forward to seeing you in the next video.